Welcome back to Lunch at the Market on this Duke National Championship Tuesday. What a game last night. Wow. Neither team was in control until the buzzer sounded, at which point the team with the lead at the time was declared the winner. True that that's actually how every team wins, but in this game with dozens of ties and lead changes, it wasn't even clear until the last shot bounced off the rim that Duke had won the crown. Easily that could have gone the other way, and the Butler Bulldogs are to be commended for their amazing effort down to the last second of the NCAA tournament. But congratulations are in order for the Duke Blue Devils, and we were sure glad to have all the family together for the game. Now that all the Carolina fans have stopped watching the show, let's get to our picks for the day. We were asked by Mr. Nasdaq and WCESQ regarding our thoughts on JOEZ jeans, symbol JOEZ. Let's take a look inside the numbers for JOEZ jeans. The company trades with a 7.86 PE on trailing earnings. That's amazing. Problem is that the forward P is a 31.5. This may be a situation where the analysts are too bearish and they're not giving credit where credit's due. The peg is 1.45. Considering the forward PE is a 31.5, that's some pretty serious growth to stay under a peg of 2. We went on the company's website and saw that they currently have 6 retail locations. The big news is that they have 8 stores coming. They will more than double their size this year, and that's a growth story if I ever heard one. They have $13 million in cash and only $3 million in debt. They have a free cash flow of $3.28 million, and the quarterly earnings growth is over 1,000% year over year. The website leaves a ton to be desired. For instance, say you'll select the section for men's or women's pants, and then you cycle through the available styles when you're done. There's no way to get back to the home page to look at another item. It didn't have a link to buy the item we're looking at. So today we take another look, and the problem seems to be fixed. Then we click on the link for JOEZ sale. Yep, it goes nowhere, and the only option is to go to full screen and then press escape to go back to the browser window. There's certainly a saturation of retail in our country, and I don't know if we lost as many retailers as we needed to in the recession, but a company growing store count with the profitability of JOEZ jeans should be taken a look at. Heck, you can buy 300 shares for under $1,000. With almost the exact same stock price, American Apparel, symbol APP, has a PE of 237 on trailing earnings, but only 9 on forward earnings and a PEG of 1.26. They actually have a very levered balance sheet, $9 million in cash and $83 million in debt. You may want to buy both of them and see where these growing retailers end up. JOEZ has a much cleaner balance sheet and looks to be behind American Apparel in the build-out of their stores. Take a look at these 2 small-cap retailers and see what you think. Thanks to Mr. Nasdaq and WCESQ for twittering us on their questions. On to the pick from the Harper asking about how we're playing Teva in terms of the time frame. To start, we always anticipate 2 to 5 years as a holding time for every position we take. It's hard to be wrong over that kind of time frame as long as the company is still in business. Once it's Alcoa and you run the highest cost production in your industry, not a good way to get ahead of the competition. So, Teva, it's a generic drug maker from Israel. Already we like the fact that it's a foreign company so that we could avoid a lot of the issues from regulations and higher taxes that may be facing American companies in the future. The company's forward PE is 12.33 and it currently trades at 28.5. That's a huge discount on forward earnings. If the company is able to earn the $5 and change in the future, and the stock gets 20-something multiple back, you're looking at a stock price over $100, and that's only with a 20 multiple on it. It trades now with a 28 PE. This stock could realistically double in the next year or 2. The PEG is only 1.04, so you're barely paying over 1 times growth for the stock. The margins are double digits, and it pays a small dividend. The company has $2.25 billion in cash, about $2.50 a share, and $5.6 billion in debt. The free cash flow is $2.5 billion, so this company throws quite a bit of cash. And generic drugs are certainly in a hot spot right now in the healthcare debate. Their generic exposure doesn't preclude them from developing their own drugs either. So there's a lot to look forward to with Teva. Thanks for joining us again today. If you have a question about a stock you own or would like to know about, and you want us to break it down to you, just mention us on Twitter with the stock and we'll bring it to you on Lunch at the Market. And then enjoy this day after the championship day, and we'll see you tomorrow.